Right, so I'm just gonna test the volume here. Just gonna test, see if there's any sound. Right, so I'm just gonna test the volume here. Just gonna test, see if there's any sound. Okay, so I've done my testing. Right, so let's get started. Okay, so for the first half of September, I'm looking for a hunt on this stop here. So for ES, on the monthly chart, we reached into this area here as I have annotated previously, right? I wanted to see price reach into this area and then reject, go higher to take out the all-time highs. So I like this monthly candle closure right here. There's a wick stabbing into it. So right now, for next week, right, because I was invalidated for the previous week, I'm expecting that consequent encroachment to hold the price. So I don't want to see price trade below the consequent encroachment of this wick right here. So basically 50% of the wick from the high to the closing price of this candle. Okay, this is the weekly candle. Okay, at the same time we have SMTs on the lows here. If you compare it with Dow Jones, right? So let me just show you the comparison. So this is the lower low for Nasdaq, lower low, and then higher lows for Dow Jones. On the daily chart, you have higher lows for Nasdaq and ES, but lower lows on Dow Jones. And then market shifted structure right here. So I believe this will be your so-called the September bottom, I think. We shall see how it plays out into the month of September. We just have the opening of the month, so I'm gonna wait till um, 12th of September to confirm what is September gonna do. Okay, so but for right now, temporary bias would be to the upside, right? We'll be hunting those stops above for ES and Nasdaq, right? So dropping down into the daily chart, we have a BC right here with a order block. Okay, so I would like to see price reach into this area here and then um, pump higher. Okay, at the same time we are above the current dealing range equilibrium, right? So um, the delivery of the price should be parabolic, okay, because we're above equilibrium and we will be hunting the stops, right? So basically the high that made the low here, right? One-sided direction. So hunting the stops here, I'm expecting a parabolic delivery. So this is for ES, NQ, very similar chart here, same thing. Okay, did not really come into the targets that I was looking for, but it's okay. Works out fine in the macro. So underlying macro, we are bullish on the monthly and we are bullish on the weekly, and now right now we're bullish on the daily. So the month of September should be quite an easy up month, right? And I think Nasdaq should be able to tag the all-time highs no problem. So moving into DXY, right? So as you can see, DXY are having quite a decoupling. So because DXY was rallying, the indices is also rallying as well. So I am assuming that it's going to be a temporary decoupling, just like what we had during the range here. I think it was in the month of April, May, I think so. I'm not too sure, but there was decoupling for DXY as well. So for DXY, I am anticipating a run into this monthly fair value gap right here, as I've anticipated, and the closure of this candle here. Okay, closure of this candle, which would be I think 16, no, 15, 14 July, if I'm not wrong. 14 July. Okay, so right now DXY bullish to this level here. We're taking out this we're hunting this stop loss here. Okay, and on the monthly chart, because it's a CB, but I'm expecting this CB to be traded through due to the underlying macro of bullishness. And if you take a look at the yearly open, right? So let me just highlight to you. This is the 2023's yearly opening monthly candle, right? So the true open for the year would be April. So opening price here on April, price went below, right? This whole entire consolidation, I'm treating this week as manipulation, right? And then we're gonna get a distribution above. So I'm thinking that we're gonna punch through the fair value gap right here, okay? And we have a longer term buy stops here, right? So I'm looking at that as well, right? And ultimately, above those buy stops, we have a higher time frame fair value gap, right? The quarterly fair value gap inefficiency right here. Okay, so I'm looking at that right now on macro level, right? So basically, power three, accumulation, manipulation, and then distribution. So that is what I'm looking at, and we shall see if it plays out for DXY. And if it does, I'm thinking that it's going to be very hard for indices to further rally above the all-time highs, but we shall see if the decoupling continues. Okay, for indices, it's a little bit special as compared to the foreign currencies because it's not an ironclad correlation, right? Sometimes you do get some decoupling here and there. Okay, so bullish on DXY, so we'll be bearish on Euro Dollar and GBP. Okay, right here. So let me just zoom out on the monthly chart. I only have one concern, okay, for the currencies. Just one concern. I think that would be. Let me just zoom out. Okay. So one concern that I have right here is this high, right? So as you can see, um, where was it? I found it, but okay, yep. This high here, right? If you compare this low versus the Euro Dollar for GBP, okay, versus the Euro Dollar, GBP was way more bearish. Okay, and then you have SMTs on the lows, and then SMTs on the highs here. So this is my only concern. Okay, and yeah, we shall see how that plays out. Overall, I'm gonna stick to the bias and see how it reacts to this fair value gap. Okay, if it is gonna punch through as I've anticipated, then obviously this swing high, as I've talked about it just now, the old high, this will be your next objective for DXY. Okay, right. So let's hop into gold. Right, so a minor decoupling here as well for gold. Right now, it seems that it wants to reverse, but we'll see how it goes. Okay, if gold can take out this swing high and close above this BPR right here, this bearish fair value gap right here, then I will resume my targets up into this area here. So previously my targets was the fourth standard deviation, which would bring to about 2187. Okay, yeah, because we have a barely price closure above the 2.5 right here. So if it really wants to, I think this is the area. Any closures above, any strong closures or obvious closures above this 2.5, this is very likely. So until then, I'm gonna keep my bias bearish for gold. Okay, this is gold and Bitcoin. Bitcoin, right? So this line right here, right? Overall, as you can see within this, we're stuck within this range here. Okay, so probably these lows are going to be taken next because they are at the same time a quarterly inefficiency here. All right, so I'm expecting total soup higher for Bitcoin. So total soup higher, take out this high here, and then maybe overextend a little bit, right? Just a little bit, and then that will be a manipulation. So you have accumulation, manipulation, and then distribution to the downside. Targets below, obviously, we have the breaker at around 10k, and then below 10k we have equal lows 3k. Okay, that would be my long-term view for Bitcoin. Until something changes, I'll update accordingly when that happens. Okay, so let's head over to individual stocks. All right, let's start off with Tesla as always. Tesla, right? So initially I wanted to see if price is able to reach into this breaker here to offer entry to take out the highs here, right? So because I'm bullish on the indices, I'm obviously going to be bullish on Tesla as well. So I want to see price make a move higher to take out the highs here. Okay, it matches nicely with the standard deviations, right? And yes, so it turns out that this BPR is more than enough to send the price higher, but we shall see if it holds above. Okay, we just reached into this order block right here, and then quite a strong rejection. I mean, in my opinion. So if it wants to come down here into this area, right, do something like a stop hunt before going higher, possible as well. Okay, but right now my eyes are on 314 and the breaker right down here. Okay, so that's for Tesla. Palantir. Right, so same thing here for Palantir. I'm expecting some form of a stop hunt. Right, this lows right here looks too clean. Right, I would much prefer a stop hunt below the lows here, right, around 1 to 1.5, give it entry, and then we press above, press higher. But we shall see. Somehow I think that Palantir it's a little bit overextended. Okay, so remains to be seen. I'm not too keen on any further analysis on the price structure like this, so I'll wait for more data. Okay, so let's move on to the next one. I think Meta, right? Meta, it's on the monthly. Right, so we have this reaction here, similar to Nasdaq. Okay, so I think Meta is the stock that is correlating very well with Nasdaq as compared to the last two companies that I have reviewed, right? Basically Palantir and Tesla. So Meta right here seems to be doing its job. So I want to see, I'm still looking for this high to be taken out. Okay, short answer here, same analysis since many weeks ago. So yeah, this is for Meta. Right, moving on. Um, what else do we have? Nvidia. Nvidia. All right. So initially, I wanted to see some form of a rejection, right? got that, but it's right now it's closing above the consequent encroachment right here. So I think it's gonna push higher. So if it's gonna push higher, then obviously I will be looking for the next standard deviation levels, which would be the fifth standard deviation at 577.99. 577.99. So this would be the fifth standard deviation, right? So let's see if it can overextend a little bit more, right? The final exit pump and then major retracements for Nvidia. Okay, right. So let me just take a look. All right. So in order to be bearish for Nvidia, right, a bearish confirmation. Okay. So the bearish confirmation would be if price can take out this low here, close below this low here, right? That will indicate that we're going to probably retrace into the 50% of this entire move up. So I'll be taking this swing low to this swing high. 50% would be right around here. Okay, so basically 1 to 1.5 standard deviation. That's what I'm looking at. If this is the top, okay. If this is not the top, then you can look for something like this. 50% would be down here to the old high, right? So let's see how this plays out for Nvidia, right? Because I'm bullish on equities, this is most likely going to push higher. So let's see. Um, okay, lastly, I'm going to cover Netflix. Okay, maybe Disney. So Netflix and then after that Disney. All right, so Netflix right here. All right, so it's eating into the premium inefficiencies right here and then into the breaker. Okay, so let me just redraw Netflix. You have the breaker here. Okay, and then you have inefficiency and then you have a bearish order block. These up close candles, these three up close candles, they are your bearish order block. So right, is there I need to look for inefficiencies below to justify price going lower. Okay, so let me just 12 months. Okay, 3 months. Right, so we only have this inefficiency right here. Okay, and then let me just it's not 1 week but 1 month, sorry. So let me just take a look. Okay, all right, so nothing much right here for Netflix. I'm thinking we're gonna retrace back into equilibrium or maybe into this fair value gap. Right, I'm not too sure. Need more data on this. So this is for Netflix. This will be your current dealing range. Right, still lots of inefficiencies above it if it wants to really balance it out. Okay, so that's for Netflix. Not really interested. Right, took out the highs, took out the lows here, the obvious liquidities, and then right now I think I'll just let it play out and then I'll see it at a later date. Okay, so this is for Netflix. All right, next lastly we have Disney. Disney. Walt Disney. Okay, I think Disney here looks good. Right, so we have obvious liquidities here, equal lows. And then we have, let me take a look at the 3 month, 1 year. Okay. I okay, personally, I'm thinking that it's gonna come into this yearly fair value gap right here. Right, so let's go on to the 3 month. Lines up nicely with this efficiency. Okay, what else? We do have a breaker, which is right here, and equal lows down here, but I think the breaker in this on block should be able to do just fine. But okay, short-term targets 78 and 69 if it wants to overextend, but we'll measure it again. 1 month. I'm gonna be treating this as a accumulation, manipulation, and then distribution higher. This is what I'm treating it as, unless price can give a convincing close below this swing low here, which I'm not expecting it to do so, but we'll see again. So okay, down to the weekly, the last swing high to swing low right here. Okay, so this I think it's more than enough. So we have the fifth standard deviation right here at about 74. So I think it's gonna reach into that, and then I'm gonna see what it does. Maybe reversing back up into the hold, into the equilibrium of this whole leg lower. Okay, for this whole expansion lower. So that is what I'm thinking for Disney. Okay, kind of tricky, but we got this. Alright, so that's your level at 74.08 for Disney. Okay. Right, so let's move on into the Chinese markets. It's been 20 minutes now. Okay. So for HSI now, if you take a look at the monthly closure right here, okay, we're closing within this BPR, which is not what I want to see. What I want to see was a expansion below this lows here, okay, and then I would much prefer it to close below this BPR. But right now, in the month of August, it's not doing so. Therefore, I'm expecting consolidation. Okay, so heading over to 1 week, the weekly chart. Okay, at any point of time, if price closes above the consequent encroachment of this fair value gap here, I think that signals a low probability for HSI, which means it's either going to continue to chop or it's going to hunt internal liquidities above here, right? Because this liquidity has been taken. So in my eyes, in my opinion, there's no reason to go above this swing high. And if it goes above this swing high, then the entire range is just bouncing on and off in the range extremes, which would be this highs here and this lows here. Okay, right, on a weekly we had a convincing close below this swing low, which is why I was expecting this expansion. Okay, expansion to take out the low here, and then I want to see if it wants. When it takes out this low here, I'm anticipating speed to take out the low here. Okay, so until we get that, I'm gonna stick to my bias. So I don't want to see closures above the consequent encroachment of this fair value gap right here. Okay, that's the best case scenario. Okay, so with the worst case scenario, soft invalidation, as I mentioned before, I don't want to see price close above this fair value gap here. Okay, pretty clear for HSI because we are in a consolidation market right now, everything's low probability. I want to see a obvious um, objective painted, okay, before I make any strong bias. Right, my strong bias will be something like the indices futures. So yes, that's for HSI. All right. So anything else? Let me just take a look on a daily chart. Okay. So daily chart right here, we have very nicely came up into this breaker. High, low, higher high, broke the lows that make the high. This is your breaker. This can be also your breaker. Okay. So I want to see price, right here, right down here, stay below or within this fair value gap right here. In terms of closure, okay, it cannot close above. Right, once it starts to close above on a daily time frame, I think it's low probability. Low probability because right here we have accumulation, and then right now we have distribution. So distributing, I want to see expansions, not expanding and then consolidate around here. Right, it doesn't work like that. Okay, I mean, I don't want to see it work like that for a market with a strong objective. So right now, just sidelines for HSI. Right, I'm gonna pause here. Right, I'm gonna pause here. All right, I'm back. So let's continue. So that's for HSI. Okay. Next, I'm gonna go into Baba, right? And I'm gonna do a deep dive into Baba. okay, for a Discord group, right? If you know, you know, right? So I'll be annotating down the years, okay? I'm going to do this step by step, so you're going to see how is it like, right? Because I have some naysayers in the group, in that group, so I'm gonna show them something right here. Okay, so okay, so right now we got this. I'm gonna hop into the weekly chart. Right, so as a long-term investor, okay, if you're really a long-term investor, what is your goal? Your goal is to make money. Okay, when you speculate in markets, I don't care what you are, a trader, long-term investor, your objective is to make money, is to make profits. And if it is best, I mean, it is always better if you can make it faster, okay, efficiency wise. So let's take a look at Baba on a macro scale. During the years 2015 to 2017, right, I'm calling this a accumulation. Okay, so during accumulations, nothing happens. Either you buy here, 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 right? You could have bought the lows, but you gotta wait for, I think, around close to 6 months before it starts moving for you, but in a very slow manner. Okay. For long-term investors, usually they always have the argument of long-term, right? 5 years, 6 years, 10 years even. So based off of the charts, you're gonna wait 10 years for something that only has been around for how much? 8 years? Is that eight? 5, 20, yeah, 8 years. Okay. I don't think that makes sense, right? And right here, let's get back to the point. Right here in the year 17, 2017, you see an expansion higher, and what follows after? Consolidation. Okay. And then in the second half of the year, it collapsed into some inefficiencies, okay? And then after that, what happens? Consolidation again. And then at the year 18, rallied up. This is what they so-called the mean reversion, reversing back into the mean, okay, above 50%, sells out again. Okay, so what kind of market is this? This is just a sideways chart market, okay? Whatever price you buy inside here is not gonna run until 2020, and then you have this COVID crash after it takes out the stops here, right? And then what? Into what? Into what? Crash into what? You may ask. There's a breaker here. On the lower time frames, there's a breaker right here. Okay, so breaker, and then with a confluence of some balanced price range right down here, you get this reversal. What does this do? Expands. Okay, you can argue that in the year 18 it's expanding, but I don't see this as expansion, right? This is expansion. This is expansion. And then this is expansion. What moves do you want to catch? Do you want to capture? Do you want to wait a few years before you get there? Right? Bear in mind that during these years, inflation was low, interest rates were low, right? You got a perfect setup for stocks to rally. But right now, what do we have? High interest rates, okay? Inflation is slowly rising, and then you're going to tell me that it's going to rally? It doesn't make sense. The environment just doesn't make sense. Okay, so for this expansion down here, it's the largest expansion as compared to the entire um, history of Alibaba. Okay, one-sided movement down for a whole year plus maybe 1 or 2 quarters. Okay, this is the largest expansion, and then investors are thinking that, oh, right down here in 2022, they're gonna be thinking like, oh, it's a reversal. It's gonna reverse right down here. It's gonna do a V-shaped recovery, right? Based on whatever fundamentals that they have their hands on. So it's gonna do a V-shaped recovery, and look what happened. When there's a large expansion, there's only three things price can do. Okay. First of all, reversal. If it was ever going to reverse, there will not be a second chance for you to buy. Okay, just like here. Okay, price went up to this high, take out this high here, back down. Okay, and then what happened? Going back into this fair value gap here, down again. Okay, you see the movements. This is what reversals are. They are strong movements, not something like this. Okay, okay. What about retracements? Okay, the second thing is retracements. If you're talking about retracements, it's almost the same thing as reversals, but it has a lower objective. Okay, and it's usually completed um not it usually doesn't take long to complete, right? So reversals are something like this. I mean, not reversals, but retracements are something like this. Okay, it doesn't take one whole year to complete that retracement. Okay, right down here, yes, this is a retracement. This is also a retracement, right? And then ultimately, on the macro level, we are in consolidation. All right. So consolidation is the last thing the price can do after a expansion. So yes, you can say that you're accumulating within this consolidation here. But for me, I don't like to wait. Okay. I don't like to wait for moves to happen for years. I don't like to wait for years for moves to happen. I want it right here. Okay, I want it right here and here. I want here. Okay, the minimum, the bare minimum, I want it here. This is the last retracement into a expansion. Okay, something like this, the last retracement into a expansion, right? I want price like this. I want to enter here. It guarantees that I'm making profits and I can exit the markets as quickly as possible. Okay, the longer you stay in the markets, right, especially if your so-called company or stock remains in accumulation, the longer you stay in it, the lower your buying power is when you exit, because you have to factor in inflation. Okay, so inflation in the early years obviously is very low, but right now we have high inflation. So let's just say you wait like 5 years before this um, company starts to move, or the stock price starts to move. You would have 5 years of compounded inflation that you have to subtract from your buying power after you exit. So that is not very, ultimately your gains will not be as what you see. You might see huge numbers, yes, but your buying power decreases. Make sense? So that is what um I want to show. Okay. So because we are in consolidation right now, okay, it's making a range, as you can see. Highs are left, lows are left, no clear direction. What is it doing right now? What's the purpose of consolidation? Okay. The purpose of consolidation is to engineer liquidity above and below the consolidation. When market is moving sideways, you engineer interest of short-term or even long-term buyers or sellers. Okay, so I'll let you know what I'm anticipating. The next the next expansion, right? The first expansion you see away from this consolidation, that is gonna be a fake move. Okay, that's gonna be a false move. Okay, either up or down. Okay, the first move, okay, it's gonna be a fake one. So you're gonna fake that. You're going to fake that. You need to fake that. I mean, okay, I wouldn't be dogmatic about it, but in my opinion, I'm gonna fade it. What I'm saying is a potential power of three. Okay, so you have accumulation, manipulation to either side, and then distribution to the opposite side of the manipulation. So let's say if it goes down first, which is what I'm preferring it to do, this is your manipulation, and then it's gonna distribute. That is what I like, and that is what I'm looking for. That's what I prefer. But you could very well do this. Okay, so this leg up is your manipulation, and then distribution. In the macro time frame, this is much more likely to happen, but I'm preferring it to run the other side. Okay, because if this happens, it will be price discovery for new lows, which would be, I think it's going to be $45 for Baba. Well, let's see. Okay, it's going to be new lows. It doesn't matter your evaluations or what P ratios or what shit fundamentals do you have. It doesn't matter. Tell me, if you can, tell me what are the fundamentals right here. What are the fundamentals in the year 2021? Okay, what are the fundamentals? And then what are the fundamentals down here in the year 2022 and in the year 2023? Justify. If you can, justify. Nothing makes sense. Nothing will make sense in fundamentals. If you put fundamentals in, you can't get what you're looking for. You will never get it. Those are just smoke screens, okay, to justify the price actions up or down. Moves, news comes after price. It doesn't come before. Price doesn't move because of news. Okay? News comes because of price. When you can understand this concept, it will change your whole viewpoint of the markets. You will be ahead of the news and you will know what to expect. There will be no such thing as reading the news for company news. What are they going to release? What kind of data they're going to release? They're all lagging indicators. Once they releases whatever news they want to or whatever data that they want to, price has already moved. You know, you can do was to sit back and then dollar cost average this shit right here, whereby inflation was high and then your buying power is decreasing while your portfolio is doing nothing. Okay, I mean, like, your investment in this company is doing nothing. If you can see from this high to this low, obviously We are stuck in equilibrium. Right here. Look at how the price gyrates around equilibrium. This is low probability conditions. You want the extremes. Okay? When price is in consolidation, you look for the extremes. Right? Pretty simple here. You're looking for mean reversion right here. Mean reversion is reversing back to the equilibrium of this entire dealing range. Okay? So mean reversion is 188. You're expecting price to reach here 188. When? When are you expecting it? Expecting it. There must be certain conditions to be completed before price can come into this area because price is run and ran by an algorithm. So it is a question of if, else, or. It's not a question of how, why. Okay. So my argument is that price, if, okay, if, else, or, right? If price is able to take out the lows here before taking out the highs, we are more likely to see a mean reversion. If price is going to take out the high first, I don't think we're going to see the mean reversion. Okay, that's just my thought. Okay, so this is for Baba. Right, we are going to have a very good year, I think, for 2024. We might see some movements in 2024. Okay, 2 years of consolidation is going to lead to a huge expansion. That's what I think. So, in my opinion, I would much prefer to take out the lows here. Okay, because if you think that there's no way this company is going to die, or there's no way this company is going to get delisted from the US market, that China is going to make a comeback and China is going to be the leadership in the world, blah blah blah, or maybe this group is going to be what, I don't know, what can happen fundamentally that you're not prepared for, right? Things like privatization, or things like getting delisted from the stock market, and then you have to go to the Hong Kong markets, and then I mean that's a whole different set of there's a whole different set of topic. So I won't get into that. Right. So for me, I'm basically just looking for a obvious run on liquidity. I'm waiting for it, and then I'm gonna see what happens next. Okay. There's no way I'm putting my money inside here. This is nonsense. I could have used it for something else, right? Some guy, some boy, some kid, right? Obviously, don't know what he's talking about. Opportunity cost 2021. Compare that to Nasdaq, man. Just do it. Compare that to Nasdaq. You're buying a stock that's declining, expanding lower, whereas you look at Nasdaq for 2021. 2021, baby, it's riding higher. So you're telling me that you have an opportunity cost right down here when you are doing this dollar cost averaging down. This is bullshit, man. And then what? What about 2022? The US stocks were declining and then blah blah blah, finding a bottom in October. Yeah, sure, you have a bottom, and then guess what happens next? You hold for the mean reversion, right? 188. You're holding that. You're holding for that. Okay, and then what happens? It just comes right back into equilibrium. Right? So you can enjoy accumulating down here. I don't care. It's your money. You do what you want, right? But I'm not gonna be that inefficient with my money. Okay? Opportunity cost. You just take a look at the year 2023. You can see it's an uptrend for Nasdaq, and then you're telling me that you missed the opportunity cost right here, this leg, this small little leg right here. Come on, man. Come on. Be realistic. You got to be realistic. Okay. So for Baba, that is my analysis, right? Short term wise, it's nothing actually. I mean, you can try to force a bias, you can try to force an idea, but ultimately you can look somewhere else. Okay, why trade why dollar cost average into something like this? I mean, as a long term investor, you're looking for returns. Over the past 2022, I mean the past 1 year, there was no returns at all for you, right? If you dollar cost average and then just take your average to be the mean of this entire range for the whole of the entire year of 2022, you're still you're still below the average cost. So what are you talking about? Dollar cost average, opportunity cost, right? So there you go. That's Baba for you. So what am I expecting consult? When am I expecting consult? I mean expansion. Okay, when? Right, I'll tell you when. 2024. From what I'm looking, I mean from what the chart is presenting, I'm thinking 2024. All right. So before 2024, I would much prefer to see a manipulation. Either side, I don't care, right? But just one manipulation to set the stage for the next distribution. Okay, that is what I'm anticipating for Baba, right? And if you're telling me that charts are of no use, yeah, it's okay. It's up to you. I'm not forcing you to buy into my idea. I'm just showing you what you can do. And you don't even need to read the news. You don't even need to read whatever data that comes out from the company. All you need is time and price. That's all you need. All right. So we'll see. We'll see if it works. Okay. We'll see if it turns out true. Someone tells me that they're going to print the receipts in 2024. Yes. I will wait for you. I will wait. Okay. You're going to go into mean reversion in 2024. Yes, sure. I'll wait for you and I'll call you before it happens. Uh, some people are just in denial. So, right. So let's jump over to JD. So JD is the same shit again, right? Chinese markets is basically shit because just look at HSI. You know that we are in um, no condition to expand, right? Because we had an expansion in 2021, and I think for HSI it is 2022, right? So JD, I'm still looking right here. These two levels here, right? As long as this is respected, these two levels here, right? And then for Tencent is basically the chart is worse than Baba. Okay, Tencent. Same thing here, right? Just gonna use this whole dealing range. It's above premium, accumulating in premium. Okay, so in this case, I would much argue that we are going to go sweep the highs first, but it's the same thing. Okay, it's low probability. There's no point in doing this. You want to enter something like this somewhere here, or maybe somewhere here. You don't have to catch the top. You just have to catch the second top. Okay. So when price is doing something like this and then something like this, there's no way I'm gonna do this. This is inefficient. Inefficient. If you're managing your money, that's an that's a inefficient way to manage your money. Okay, in my opinion. So what I'm thinking is Tencent is gonna come down to this low here. It's gonna take out this low here. Okay, that's what I'm thinking. Right. So you can accumulate all it wants. Right. Ultimately, I'm thinking if this is the range here that is accumulating, or it's consolidating. I'm much preferring a manipulation higher. All right, because it's in premium right now. A manipulation into discount that would spell reversal for Tencent. Okay, and then this low will be left for a later point of time. Later point in time, I think right around here when it retraces into this area. So if Tencent is able to manipulate lower, I think Baba is gonna hit the lows. So we'll just see. We'll just see how it goes. Okay. So I think that's it for Chinese markets. All right, just let me take a look at Baba again to see if I missed out anything. Oh, and by the way, I think I'm gonna show you something. So you can use. Let me show you something. Okay. So this is the weekly chart. I'm gonna zoom out to the monthly. I'm gonna show you the true monthly opening for every year. Okay, so let's go forward. True open for every single year. Okay, the true opens starts in in the month of April. So the opening price of the April's candle, that is your true yearly open. Okay, so I'm gonna draw out all the true yearly opens, and I'm gonna show you something cool. Oops, wrong line here. Okay, April, April, April. Oh man, wrong line again. Okay, this is something that I learned from a trader called Day, Daye. Right? If you want, you can look him up. But I learned this from him, and I'm applying it to company stocks. Okay. Okay. April. Okay. One more. two more years to go. April. Wrong line again. April. And then April right here. Okay. And now I'm going to take you back to the weekly chart. Alright, let's start off with the year 2025. Right. So during that time, what is the macro? I'm not too sure, but I'll tell you something. If you are, wait a minute, why is the monthly open different? Okay, just use this as a draft, but you can map it out on a weekly time frame if you want to get the exact price. Okay, so let's start off. If you're bullish, you want to buy below the true open, the true yearly open, right? Let's say you're a long-term investor, you want to dollar cost average. Okay, you want to dollar cost average below the true yearly open. All right. Look at this. Dollar cost average down here. There's nothing for you to be afraid of. You just have to know where is your risk and what is your limit. Like what is your stop. So here, look at the true yearly open. Right, you barely have any drawdown. I mean, long-term drawdown. Okay, that's what I'm talking about. So here, yearly open, true yearly open. Okay, not the yearly open, but the true yearly open. Okay, if you're bullish, you're gonna buy below the yearly opens. If you're bearish, you're gonna short above the yearly opens. Okay, you see, as long as you buy, if you're okay, if you're bullish long term macro wise, okay, whatever, 10 years, 15 years, you're gonna wait, right? Buy below every true year open. Take a look. You will, most of the time, you close the year above what you bought. Okay, the close of the year is here. Okay, you most of the time you close above what you bought, so you always end up in profit every year. Okay, almost every year, right? And when something changes in the environment, when US starts to collapse, or if you find something um, happens in the fundamentals of the environment that you're in, like let's say for interest rates, let's say uncertainties of times of uncertainty, sorry, or let's say you're expecting something bad to happen, okay, in the worldview, okay, you would short above the true opens, right? The yearly open, short, right, right, yearly open, right here, short, short, write it down. Okay, you're bullish, buy here. You look at the price reactions. Okay, buy below here, you buy below the price, and then you keep doing that, buy below, buy. You ultimately you outpace everybody. Okay, you outpace everybody, but you have to know when to exit. So in this example right here for Baba, okay, I'm using Baba as an example. When do you exit? Okay, you use the last swing high to swing low that took out the liquidity. So for here, you measure the highest usually can go is 4. Okay, rarely sometimes you get to 5, but you expect some retracements after it hits these two levels here. Okay, so 2.5 is the basic. It's gonna 2 to 2.5. This is the range that usually there's no problem going there. Okay, for the algorithm to spool to this area, usually it's not a problem. So let's say you accumulate this year, and this year, take profits down here, leave a runner. Okay, and then right here you're still bullish. All right, buy it below here, sell here, fourth, and then right here, as soon as this high, okay, as soon as this high is traded above, use the most recent swing lows to swing highs, and then you project it again. So taking profits here. So you don't have to discard this level. Okay, you can just do this, and then you map it out with this. So this is basically where your um, take profits will be, right? So you buy down here, again you reaccumulate, right, the positions that you have sold at 2.5, 2 to 2.5, reaccumulate here if you think that the macro is bullish. Okay, that is if you think that the macro is bullish. Okay, so over here as well, accumulate, and then you sell it here, right around here, and then you can leave a runner for here and for this high here, right? Eventually get close to it. It was close to it, but didn't quite make it. So right here, overall, you can even pop in a tree, right? The third standard deviation if you want to, and then you can sell there. So I mean, you can take profits there, and in this way, you won't be keeping all your capital in the stock market and expect it to moon. Okay. Some stocks do that, yes, but it depends on the chart, right? So because people are bearish now, I mean not people, but because of macro is bearish right now, maybe even for HSI. Over here, you look for shorts above opening, above true open, look for shorts. Right down above true open, look for shorts. Write it down above true open, right here, and you look for shorts again. Okay, but over here, because look at the consolidation right here, there's no true bias for Baba. Okay, so I'm just gonna wait. There's no rush. There is no rush, right? So as you can see, right down here, this is your roadmap, right? Your roadmap to accumulating shares and dollar cost averaging. That's how you do it, man. Right? If you want another example, right? Let's use the most popular stock, or I mean, let's do that. The most popular stock, I think Tesla recently most popular. Okay, let's do this again for Tesla, right? Okay, I'm gonna remove this. So let's draw it out here. Okay, it works. If you don't believe me, just do it yourself. Okay, I'm gonna skip all this. Okay, I'm not gonna do those. It's too low the price. Open. Can I just copy paste? I think I'm gonna do that. Let me just adjust. Oh man, this is gonna be tedious. This is going to be tedious. Okay, gonna duplicate this. Let's see if it matches. Oh shit. Okay, I'm gonna move this, so please move. Oh man, I only move one. Okay, I'm just gonna do it manually. Okay, every single year. Every single year. January. It's gonna take me a while. Okay. Before I continue, right? Because we are in a. Okay, never mind. I'll just do it again. 2021 and 2022. Again, okay. I've learned this from Trader Day. You can look him up. Daye. Right. I learned this from him. So if you're interested, you can learn it from him as well. You can learn more from him. Okay. I'm just showing you the basics. Okay. And you don't even need a lot. You just need a idea, a concept. Okay. And then you look. Right. In this whole duration, Tesla was in consolidation. All right. So let's say you're bullish on this company called Tesla. Right. Okay, you found this company and you're bullish on electric vehicles, blah blah blah, green energy, blah, right? Elon Musk, your idol, okay, whatever. Okay, you're gonna look for April's open. This is the month of April. Where's the 1st of April? Okay, I'm just gonna zoom out to the monthly chart, make things easier. I don't have the lines. Okay, I have to do it here. All right. April, first week of April. This opening price here. Okay, buying below, right? Because the idea was that you found this company called Tesla and you're bullish on this company. Okay, you're bullish and then you're looking good prospects. You feel that it's good. Okay, whatever. Right. All you have to do is to buy below through your opening price. Okay, and then you look at the amount of drawdown you have. March, April. March, April. This is very simple, guys. This is very simple. April. Okay. April. April. 1st of April here. Right, so I'll just pause here and then I'll continue later on. So over the years, right, you have this electric car company, and then you really like this company, and then you have this guy called Elon Musk. You really idolize him a lot. You want to accumulate shares of this company. You're bullish on this company. Okay, so all you have to do is to buy below the April's opening price every single year. Okay, below the price, closing break even. Okay, below, buy it, break even again. Over here, you buy it, right? Your average is going to be somewhere around the mean threshold of this entire range here. Okay, your average is going to be somewhere around here. So your drawdown is not going to be a lot. Okay, it's not going to be a lot. Okay, so over here, it starts to run, you're bullish, right? There wasn't any opportunity here. So this year you skip your dollar cost average. Okay, and then the next year comes, you average down here. Every time the price tags into the monthly open, you average. So over here as well, average again, right? Over here you might receive some drawdown, okay, but you average again, and then when the expansion comes, right, if you're right, look at the amount of drawdown you have. This is unbelievable, right? You do not have a huge drawdown. Okay, something that you must factor in is when you're into investing and stuff like that, you don't look at your targets first, you measure your risk first. Okay, that's what many people lack. Okay, so right here starts to move, right? So where do you take your profits when you have accumulated down here? You look for the most recent stop hunt, and then you use the fibs, and then you measure the one-sided movement from the swing high to that low, and then you map it out. 2.5 and 2 is the easiest target you can get. Okay, easiest low hanging fruit. Take profits down here. Okay, and then what happens next? Okay, April comes again, right? April, where's April? So April comes again, 6 April, right? Here in this candle, no, this candle. Okay, opening price, right? 6 April comes again. You look at this little wick down here, you can buy that. So you accumulate, you took profits here, so you take all your risk off, and then after that, when it opens at April again, accumulate back your shares. Even if you're really bullish, accumulate back your shares here, and then ride it. Wow, wow! Look at the amount of expansion right here. So this is something that you would have caught, right, by just buying below. But what I want to emphasize is the drawdown. Okay, the drawdown that you have is minimal as compared to if you just dollar cost average every single month, small amounts. Okay, collect up your money, right? Think about how you want to invest it, right? How much are you willing to lose, and then throw them all in one go under. If you're bullish, okay, this is for the long-term investors. Okay, you can only buy, you can't sell. So you can't sell short. That's what I meant. Okay, but you can take profits. What I'm saying is, if you are a long-term investor, you're looking to dollar cost average, and then you have a certain amount of money that you want to lose. Okay, You want to take a gamble, you want to take a bet, buy under April's opening every single year. If price doesn't give you a entry, right, like let's say down here, then that's too bad. You have to skip this year and then you accumulate the next year, right? Just dump all your money underneath um, April's opening, and there you have it, right? So right here, this expansion down here, same thing. Look at this expansion, and then this is for an entire year. You get your lottery ticket. Okay, so right here, what happens next in this consult? If you're still bullish, okay, right, you really want to gamble, right? By this time, you would have been a millionaire, but you really want to gamble, you want to take it to the next level. Sure, you're still bullish based on economics. You're still bullish, right? 2021. That's after COVID, right? So if you're still bullish, right here, April. Okay, you buy until April's opening price, and you write it one more time. So the last swing low that took out the last leg lower was this, barely touching two, right? As you can see right here. So that is where you want to exit, okay? And then you look at what you look at your when the macro shifts, right? 2022 Federal Reserve starts to increase interest rates, right? So that is bearish. But let's say you didn't know that, okay? Let's say you don't feel it, the inflation rising, you don't feel it when you go to groceries, right? You don't look around you, okay? Whatever it is, you bought it again. You thought it was going to go higher, you bought it again below April's opening price. Where is it? Here. Okay, now tell me, would you have thought that you're wrong down here? Like, oh, something changed. Compare the drawdown. Compare the drawdowns. Okay, if you were right, your drawdowns should not be humongous. Okay, if you're right, your drawdown should not be humongous. Let me repeat that. Okay, when you are wrong, you only take 1 year to know that you're wrong. Right down here. Look at this drawdown. Is this normal? Right? If you have accumulated all these years of doing the same thing over and over again, and then something like this happens. Even if you don't watch the news, even if you don't know what the Federal Reserve is doing, even if you don't know, like you're too rich, you don't know that you're too rich from this pump here, and then you don't know that inflation is rising in grocery stores. The price action clearly tells you that something is wrong. Okay? And then you will be wrong for this 1 year while you have accumulated below all these years. Okay, so let's take a look at 2023 again. Below April opening price here. I'm sorry, the opening price is here. Oh my gosh, I'm drawing the lines wrong. Opening price is here, but you get the idea. Okay, opening price is here, right? You get the idea here. Alright, so below April's opening price. See, this is what I meant. All you need is this. Okay, all you need is this. A long-term investor, yes, you'll be wrong for 1 year, and then you'll be able to break even right now here. When you bought here, you can break even here, and you see what's gonna happen next year. Okay, so if you can mix, right? Okay, let's say you know this right now. You mix it up with ICT's concepts. That's gonna give you the lows here, right? You will be able to know when the market is reversing. You will be able to know the direction of the macro. Of the price. You will be able to know the order flow, and you will not be buying up here. Get it? If you can apply ICT concepts here, you will not be buying up here. Okay? And that will negate this loss, and you have taken profits up here. And then you'll be good and set for life. Okay? So heading back to Baba, it's funny, right? How these guys or how these YouTubers are promoting the idea of dollar cost average. Nothing's gonna go wrong, right? Eventually, everything moves up. Yeah, sure. This year turns out to be really nice for them. It wiped out all the gains if you never took any profits on the way up. It wiped you out. Okay. If you have not capitulated, right? If any Baba holders have not capitulated here, this is their last line of defense. If price starts to trade below this level here, they will capitulate. Okay. So the last swing high to the swing low, what was it? Because we're in bearish order flow, right? We are closing below 2.5. So what is it gonna go next? To 4. How high can it reach to before going to the 4? 1 to 1.5. But most preferably you want it to stay with it 2 and 2.5. That would 2 and 2.5 right down here. That would be your quarterly inefficiency entry for short to go for the negative 4 standard deviation, which would be at 45. Let's say you bought it here, price average price 100. I've seen some that's higher. It goes to 45, and then if you're not capitulating, then I think you're just preparing for your portfolio to go to zero. But most retail investors will capitulate down here. So when they capitulate, that's what I'm anticipating, right? Manipulation, lower, and then we reverse. Okay, that is what I am anticipating. Doesn't mean it's gonna happen, right? Gonna see what happens next when it takes out this low. What is price doing? If it starts to close and accelerate below the lows here, then obviously it's price discovery to the downside. Can't, there's no argument about that. Okay, so this is how you can do your dollar cost averaging and your investings with minimal risks involved. Yeah, this is the easiest, the most basic thing you can do. Wait for every year's April's opening. If you're bullish, you buy. If you're bearish, you sell. Above, below, and above, respectively. Okay, so that's it for today. That's all I got for today, and I hope you find this helpful, insightful. And if so, do leave a like and leave any comments down below if you have any questions for me. And I'll see you guys in the next session. It's been over 1 hour 20 minutes, and I'll see you guys again next week. I'm gonna sign out now and have a great weekend and stay safe. That's it for me.